talk about the market this morning with Alan Nuckman, Chief Market Strategist. We'll come back to Zoom this afternoon. Alan joins us from bullseyeoption.com. All right, Alan, market's wavering here. Right. VIX stuck at 30. That thing just won't move, huh?
Well, 30. I'm not worried about a 30. If you notice, we made new lows, but lower highs in this VIX. So it's been a series of lower highs on these four major sell-offs that we've seen over the last few months. So that's bullish divergence. That's a positive. And to your point, at some point here, you're going to see some short covering in some of these stocks that have just been brutalized and some profit taking for these people, and they're going to be forced to take their profits. But until we see the market build on it, we continue to see this grind and grind. But the PE ratio right now is at 16. Look at that, 16.
All right. So where does that leave you? You're still avoiding the index trade, Alan, as you mentioned to us. You're waiting for something more demonstrable of a bullish move to get long the S&Ps?
Well, you can get long some S&P options and get positioned for time because we are very, very oversold, obviously. But in the short term, I think there's some great risk-reward opportunities and plenty of stocks right now. It was much harder to find great trades when the market had been on a tear forever. And now there seems to be a lot of stocks that have this bullish divergence, meaning they've made these new lows, but we're not making new relative highs of volatility. That's typically when you see the short sellers running out of strength, and that sets up for a short squeeze. Now, how sustained it can be, that's been the question. But let's remember, it's only been 6 weeks since we were above 4,500 in the S&P, and it looked like we're going to rally and make new highs. So a lot of this is sentiment, and this sentiment issue is really a concern for me because the earnings that came out this quarter all beat expectations, but for whatever reason, the reaction was negative, and that hasn't happened since 2010, this type of reaction where we've had positive earnings numbers come out, beating estimates, but negative reaction in price.
Okay. All right. Today, though, you're not going specific earnings. You're just looking at a beaten down name that is doing better than its high growth disruptive peers. Ford flattish to maybe a little bit stronger on the morning, while Tesla's down 2%. XPeng's getting crushed after their numbers. What do you think here, Alan? Time to BTD at the 52-week lows?
Well, looking at Ford here, I'm in Ford country. I'm in Michigan. So looking at this stock, it's come back down.
I can't keep track of you, Alan. You're always moving around.
I've got places to go. Make the markets work for you. Don't work for the markets. I think we've used this line before. So looking at Ford, it's a stock that's come back to its breakout point. It had traded between 5 and 15 for 5 years before it rallied to 25 there in January. Now it's 50% off its top, but it's still up 200% from its COVID lows. So I also see the bullish divergence we just talked about. And I know you're a fundamental guy. The PE is 10. So it's still a very inexpensive stock relative to the market in general.
Okay. So you're buying the 10 calls for $350 and looking for this thing to move up. So you're pretty much right at the money?
Yeah, we're going in the money, going deep in the money. We're
deep in the money,
trading.
okay.
So we're $2.50 in the money. This option's trade for $350. So the expiration break even's $1 higher, but it's a January option. That's the play. January has 8 months of time, and this is only $50 more expensive than buying September. So why not buy more time? Time is our greatest asset. It's got a high delta above 75, and like I said, plenty of time. Now, looking at this Ford chart, when it does turn, I'm not trying to pick the exact bottom of this stock, but when it does turn, there's a gap up above at 19, and 19 is also the halfway point of this drop from the top. So there's a lot of things to like, and I would like to think that this stock can have some sort of modest rebound. Whether it's sustainable, I'm not saying it's going to be, that's the case, but it's going to have some sort of modest rebound between now and the third week of January of 2023.
Okay, all right. As we speak, Ford adds on another 40 bips, slowly but surely moving in the right direction for you. Okay, Alan, thanks for the trade.
Thank you.
Chief Market Strategist at bullseyeoption.com, taking a stab